this is how I got 155 pips in the gold market on Tuesday. So the first thing I did, I went to the bigger time frame and tried to understand what the market was doing from there. Then I came all the way down to the smaller time frames to look for my entry. And actually before that, during the beginning of the London session, I had a bullish buyer, so I was looking for buy entries in the market. But again, the market didn't give me what I was expecting. Let me show you what I was looking in the market when the London session was beginning, so that maybe when you find yourself in a situation like this, you may know what to do. All right, so the first thing I did in the morning after the London session beginning, I was in a bullish market. This market was in a bullish trend at the moment when I woke up. It was above this area. Then I was looking at this market at this point, then I was seeing it giving me something like a bullish pennant at this point. From the previous day, the market was giving us this impulse move. Then I was expecting now this to be a correction. Then this market did come to this area down here, went up again, came down to this area down here. Then it gave me this double bottom at this point. So on Monday, I took my buys from this point. Let me show you. On Monday, I took my buys from this point because I was seeing these kind of structures at this point. And from the 1 hour time frame, I took my buy from this point down here after this 1 hour candlestick closing above that immediate high that was created at that point. Let me show you. We had an immediate high that was created at this point. We had an immediate high that was created at this point over here. Over here, we had this immediate high that we had. And also, the market had already given me these double bottoms at this point. So, I decided to take my buy at this point. So, taking my buy at this point, I was expecting the market to continue pushing upwards. But we had a key area at this point whereby the market, we saw that it rejected at this area, failing to break above this area, then coming all the way down to this support area. So when I woke up on Tuesday during the London session, I was looking at this market still in a bullish way. So I was looking to go in bullish in this market, but I didn't get any confirmation for me to go in the market. So I decided to wait and see what the market was doing. So I decided to mark this area around here. I decided to mark this area around here. There is this area that I was observing. So I was expecting that if this market did break above this area, I could have gone in for my buy entries, because I was expecting now after this market breaking above this area, it would go break above this area again, then give me a retest, then we continue pushing all the way to the upwards. But that is not what happened, guys. So after seeing that this market has consolidated at this area for a very long time, I try to understand from these smaller perspectives, what is the market doing? Why is it not moving at this point? Why is it consolidating? So I try to understand what the market was doing at this point. So looking at this market at this point, I saw that this market is giving me these bearish structures at this point. So we were on a downtrend from this 4 hour time frame. From a 4 hour time frame, look at this 4 hour time frame is giving us this. Let me show you. From this 4 hour time frame, this market is giving us these bearish structures, this bearish channel. So we were on this bearish channel at that point. Then seeing that this market has failed to break above this bearish channel, there's no point of me continuing to look for buy entries at this point. So I decided to look at this 15 minutes time frame. What is happening there? Then looking at this 15 minutes time frame, I did see this head and shoulder at this point. Let me just delete this so that my chart can be very clear. So I saw this head and shoulder at this point. This market was giving me a head and shoulder at this point. We had this head, left shoulder. We had that left shoulder. Then we had this head. Then our right shoulder was at this point. This was our right shoulder over here. Then this was our neckline. So seeing that this market had come all the way to this area, given us this left shoulder, head, right shoulder, then breaking below this neckline. So I saw that this is a sign that this market is still on a downtrend and we still continue pushing to the downside. And if you can look at this clearly, this is a correction that we had at this point. Let me show you. So this is a correction that we are having at this point. This market was giving us that we had that impulse move, that small impulse move from there. Then this was a correction. We had this correction at this point. After having that correction, then we continue pushing to the downside. So we had this correction. So the market broke below this channel. After breaking below this channel, we continued all the way. Then we broke below this neckline that we had at this point. After breaking below this neckline, that is a good sign that, hey, that now we're starting to push to the downside. But the market didn't go straight down there. It broke below this neckline with this small impulse move at this point from the 15 minutes time frame. Then after breaking below this area, it started consolidating at this point. So when I was waiting for this market to break above this area, this was just a consolidation that I hadn't seen from the smaller time frame. So from the 1 hour time frame, I was expecting this market to break above this area, then I take my buy opportunities. But coming down to the 15 minutes time frame, I saw this market consolidating around this area. Then I decided now to start looking for sell entries, because this market had already started giving me these sell opportunities. And on top of that, I went to the daily time frame. And saw that this market had already given us these structures. Let me show you. Let me just clear that and show you what this market had already given us. So from the previous day, this was a key area that this market was playing at. So after this market playing at this area, it failed to close above this area. And from my previous videos, I told you guys that if this market fails to break, fails to close above this area, if this market fails to close above this area, then we should expect this market now to continue pushing to the downside. And that's exactly what this market did. This daily candlestick failed to close above this area that I was expecting at this point. This candlestick failing to break above this area was a sign that, hey, we're starting to push downwards. And that's exactly what happened. Looking at the 12 months time frame, let me show you. Let me show you from the 12 months time frame what was happening at this point. From the video that I did on Monday, from the 12 months time frame, this is what was happening at this point. So this market had already came all the way from down here, gave us our first touch at this point. This was about 1980. Then gave us our second touch at this point. This was about 2011, and right now we were having our third touch. So at this point, I was expecting that if this market fails to close above these areas from the smaller time frames, then I was expecting that this market has a high possibility of reversing all the way from here and pushing to the downside. So with that in mind, let me go to the weekly time frame and show you what kind of candlestick we have there. First of all, let's go to the weekly candlestick. So this is the weekly time frame, and see the kind of structure that this market was giving us at the weekly time frame. This weekly time frame, this market was giving us a double top. And you know, guys, whenever you see a double top on top of a bullish trend, that means that is a sign of reversal. So that means that market has a potential of pushing to the downside, and that's exactly what is happening in this market right now. So having all that in mind, now I went to the 4-hour time frame and saw what this market was doing. So looking at this market at this point, so we had already this bearish engulfing candlestick at this point. This bearish engulfing candlestick at this point. Then after that, we had a correction again. We had another bearish candlestick correction. We had another candlestick. So that means that this market was pushing downwards. So there was no point of me looking for buys at this point. So I went down to the 15 minutes time frame. Then I waited for this market to close below this area. I was expecting this market, if it does break below this area, I was expecting that if it does close below this area after having all those confluences in mind, so I was looking at this market that if it does close below this area, then I should go in for more for my sell entries in the market. And that's exactly what the market did. The market came down, closed below this area. Then I took my entry at this point because I was after taking my entry at this point, I had this small drawdown that we had at this point. Then the market now started pushing to my direction. That's where we ended up getting about 155 pips in the gold market. And I literally shared this with my free Telegram channel community. Let me show you guys. I gave them this signal. I told them when to enter and when to get out of the market. This making us our 7th trade that we took this month, and all of them, guys, went straight to take profit, giving us about more than 4,000 pips in just a single month, and trading only 7 entries in just one pair. That is crazy, guys. That is crazy, you know. So I shared this with my free Telegram channel community. I gave them this signal. Let me show you. I told them to sell at this point. I told them to sell at this point because this is where I took my entry. After seeing that this candlestick had closed below this area, then I saw this kind of rejection at this point. So I told them, guys, they should sell at this point. So they took their sell entries at this point. Taking their 2 sell entries at this point, the market gave us that pullback. Then it reversed and gave us straight 155 pips, smashing all our take profits. So that was our first take profit was about 65 pips. Then our next take profit was at 155 pips, and we killed this market on this Tuesday. Yeah, so that's it, guys. So make sure, guys, you join my Telegram channel. So if you're not there already, you're missing out a lot. And actually, I'm giving out these all for free. I'm giving out all these for free, and I have a private mentorship, so you can make sure you check it out also in my Telegram channel. So yeah, so this is how we did on Tuesday. Let me show you what I'm expecting gold to be doing this week. So after now the market giving us this kind of structures, let me show you what the market is doing from the bigger perspective now. So looking at this market, we had an upward channel from the 4-hour time frame. This is an upward channel that we had from the 4-hour time frame, and I was expecting that if this market does take out these areas at this point, this area, then I should be looking for more for sell entries in this market, and that's exactly what this market has done at this point. Let me show you. So I was looking that if this market does take out this area at this point and breaks below this area, then we should expect now the market to start pushing all the way to the downside. So what we should do is wait for this market to close below this area. After closing below this area, then we should expect this market to give us something like this. We should expect this market to give us a correction. So after closing below this area, we expect this market to give us probably a correction. Then after giving us this correction, now we wait for this market to break below this correction area. Then we take our entry, targeting this as our take profit 1. Then if it does come up again, we take another entry from there, targeting all the way down here as our take profit 2. So we do this all the way to this area down here, and that will be about 1,000 pips, guys. That is crazy. So, and if you scale in, which means you can make more than 1,000 pips from just these simple entries that the market will be giving us at the moment. So make sure you type in all my channels so that you'll be getting all this information, because I'll be sharing every single move that the market is making. So I'll make sure that you guys understand what the market is doing. Make sure you check all those links, and make sure you subscribe to my channel. That's what I'm looking at in the gold market right now. So after closing below this area, we should expect now to go into bearish bias in the gold market. So, and we should be looking for sell entries in this market probably for the whole of this week and maybe up to the end of this month. And actually today we have FOMC. I don't know what will happen during the fundamentals. I don't normally trade fundamentals, but during the FOMC maybe it may push the market all the way down probably, but it won't go too far. It will go about let's say probably about 300-400 pips, then come back again. So we'll be looking for those corrections. Then after finding the best entries, we take that advantage, guys. So thank you for watching. This is ProfitNet signing out. Make sure you check my links in my bio, join my Telegram channel, and subscribe to my YouTube. Then see you in the next video.